तो कल क्या था?
Hello, good evening. How are you guys? So
Hello,
welcome to
good evening.
welcome to the first class of the financial reporting, and I will be dealing with you guys for this course. And before we start formally, I would like to know about yourself, that what you guys are doing, what papers have you opted this time, and if you guys are doing a job, then what kind of a job?
My name is Piabukas Mariam Nuha. I have started level 1, ACCA level 1. I have completed and I am yet to sit for my FA and ME exams, but it will be completed by August. And I am not working currently, but I will start searching for a job once I have done my A level, level 1, sorry.
Okay. So currently you're not doing any job, right?
Yeah, I'm not working.
Okay, okay. So next one we have, this is Shamina, if I'm not wrong.
Yes, hello. Can you hear me?
Hello. Yeah, I can hear you.
Yeah. I'm Shamina and I work currently at the local authorities of Mauritius. And I have completed level 1 and 2 papers, F5, F6. Now I'm doing financial reporting. And that's it.
Okay. So you've only opted for one paper this time?
Yeah, because I had a surgery and I'm actually under medical observation. So I cannot afford to do two papers.
Okay.
Yeah.
I do hope that you get well soon and
Yeah.
you're back on track. Definitely for sure.
Yeah.
And then you can offer the more papers. It's good thing that you are kind
Yeah.
of keeping yourself in touch with the studies, and it's that you're not totally away from the studies. It's fine. I mean, if you are going with the one paper only,
Yeah.
and the next time when you're feeling well, you can go for the multiple papers next time.
Yeah. Sure.
Okay. Then we have this. I'm sorry if I pronounce your name wrong. This is Yeshna, if I'm pronouncing correctly.
Yes, sir. Good evening, sir. This is Yeshna. So I work in Avacat Mauritius Revenue Authority. Hello?
Yeah, yeah. I'm
Yeah.
listening.
And I have opted for financial reporting paper and audit and assurance paper.
Okay.
Yeah.
Okay. So what job do you do actually? I mean, what's your role in the company basically?
I'm still a trainee customs officer.
Okay. So you're into the customs, huh? I mean, everyone who enters into the Mauritius has to go through you, right?
Yes.
Okay, okay. If I talk about my country, that's a very good job to have as far as being into the customs is concerned. And normally when we are traveling, we just hope to get someone a customs officer, someone with a good temperament, something to allow us to come into the country. I mean, with all
Yeah.
the goods that we have currently bought because if I talk about over here, the government has put on a ban on some certain imports, but the ban was actually onto the imports. But I don't know what the custom guys are doing, and it's totally up to the things are varying according to the person and person to person basically. Some customer officers are basically allowing for some of the goods, whereas the other customer officers, they are even holding on to the chocolates and the juices as well. I mean, the passengers while coming into the country, if they have some chocolates with them as well, if the customs officer is not in the mood as well, he's even holding up to the chocolates as well. So I hope this is not the case on your side. And anyhow, but that's an interesting job to do. I mean, as far as the security is concerned as well of the country,
Yeah.
and as far as looking and sorting out the stuff is concerned, it's a good one to have.
Yeah. Thank you.
No problems, no problems. You're welcome. Okay, now we have Rakshita with us. I hope I've pronounced your name correctly.
Hello, yes. Can you
Oh,
hear me?
yeah, yeah, I can hear you.
Okay, okay.
So tell me about yourself. What do you do? What papers have you opted and all?
Okay, so my name is Rakshita and I'm from Mauritius. I'm currently working at BDO Solutions and it's my first attempt on the F8, which is no F7, which is the financial reporting paper, and I'm also doing F8, which is audit and assurance.
Mhm.
Both are my first attempt.
Okay. And F5 and F6 along with F1, 2, and 3, they are clear?
Actually, I got the exemptions for level 1 and
Okay.
for corporate law.
Okay.
So it's my first class for ACCA, like
Okay. 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 And what have you studied before?
banking and finance.
And you've done your bachelor's in that?
Yes, yes, bachelor's degree.
Okay. Okay. Very good. And technically, you are doing the ACCA because of the job requirements, right?
Uh, or for the job requirements and also because I want to learn more about accounting. I love accounting. So.
Okay. That is a spirit. That is a spirit. That's a good thing. That because around 99% of this, the students which I normally get around, they
Mhm.
are basically studying because of the job requirement, because there has been some of a change as far as the requirement of the job is concerned. And
Yes.
most of the students are basically doing it just because it's a requirement by the employer now that you have to be into the ACCA. But it's a good
Mhm.
thing. It's a
Thank
good
you.
thing. Yeah.
Thank you.
Okay. You're welcome. You're welcome. Then we have. I'm sorry. This is gonna be now. Uh, I'm sorry because it's like kind of difficult for me to pronounce the names first time. I'm extremely sorry if I pronounce your name wrong. This is uh, Puna Samje. I'm sorry if I'm pronouncing your name wrong. Kindly unmute yourself and tell me about yourself. This is P-O-O-N-O-O. This is Puno Samje, if I'm not wrong. Yeah, Sammy J, if you can hear me, kindly unmute yourself.
Hi,
So, first of all, tell me about your name. What's your name?
Punusami.
Punosami. Okay. Okay. The J was for the other niches. Okay, my bad. Punosami. Okay, now I got your name. Okay, tell me about yourself. What papers have you opted and what are you doing? I'm like, as far as the job is concerned.
Okay, I'm an auditor, external auditor, and
Mhm.
I am doing financial reporting in December sitting.
Mhm. And any other papers along with the reporting or only the reporting one?
Only the reporting one.
Okay, okay, okay. And you are into the external audits only, right?
Yes.
Okay, that's good. That's good. Then we have Dharma with us. Tell me about yourself.
Hello, sir.
Hello.
Yes, well, I'm planning to do F9, F7 in December.
Mhm.
That's why I'm enrolling for the course.
Mhm.
I work at the Mauritius Revenue Authority as a tax officer.
Okay, as a tax officer.
Yes.
Okay, that's an interesting job to have. I mean, as far as the tax is concerned, because
Yes. Yes.
yeah, because if I talk about myself, I'm kind of like always comfortable being a student. If I say I'm always comfortable with the reporting and the audit, but as far as like when it comes towards the tax, because
Okay.
of like the continuous updation and all, it kind of like gets tricky. But as far as the paper F6 was concerned, I do still remember when I attempted that at that
Yes.
time luckily I had some good rather teachers rather I would say because in one attempt I couldn't like appear for the paper because of my health issues and all, but second time I got a very good teacher as well, and he made us to do the practice, lots of practice. I do still remember some of the
Yes.
concepts as
Yes.
well,
It's
but
lots
as
of
far as like
practice.
yeah, I'm also working into the audit firm as well, but I'm into the side of the audit basically. So
Okay.
I only know about tax is tax tax, and like when I'm teaching about the IAS 12 income taxes over here, I try my level best to like make you guys or make my students understand like what the tax is about and how the standard works. But as far
Okay.
as the F7 is concerned, this reporting paper is concerned, I've seen and observed that most of the time, basically, like when I almost take all of like the one whole day for the discussion and all, I end up like making my students learn and rot two T accounts for the tax purposes, and 99% of the questions are being solved according to that. But anyhow, during the course, I do hope that I will get to learn a lot about the tax from you as well when we will be
Okay.
doing the topic of tax as well. So
Yes.
this is a good
Sure.
thing.
Okay. Thank you.
Something good. Okay, then we have Gavishna. I pronounced it correctly. Gavishna, please tell me about. Okay, maybe Gavishna is unable to hear us. We have Ismail with us as well. Ismail, kindly unmute yourself and tell me about yourself. Uh, I guess Ismail is also unable to hear me maybe properly. Okay, let's just hope if they are unable to hear me, then I hope the problem is resolved and they are able to hear me properly as well. And meanwhile, before starting, uh, you all are familiar with my name, Qasim Ishtaq, and I am into the teaching since 2005. And I've been teaching the ACCA stream as well. Plus, locally, I am working as an associate professor into the university as well, teaching the MPhil, MBA, MCom, MSc, like, related to the accounting and finance. Then I'm working into the audit firm as well. So it's been like, kind of a lot of mixed up experience with me over here. And as far as the ACCA is concerned, my hardcore specialty is basically the reporting, and I'm dealing with the financial accounting reporting and the SPR papers. And one thing that I'm always like, kind of happy about the students from the Mauritius is that 90 to 95% of the times the students are from the accounting background. Accounting background means they do have a bit of a knowledge about the accounting. And when it comes towards the paper, the financial reporting, it's always kind of like, get easy a bit because you have studied somehow, some way, a bit of the financial accounting as well. And one thing that all of you have to keep in mind, that when it is your first attempt as far as for the paper or the FR paper is concerned, it's always easy to pass the paper. When you are attempting it for the first time, it's always easy to pass the paper, because at first, or for the first time when you're studying the paper, it kind of gets easy to pass because you are able to put in all of your 100% of the efforts as far as the topics or the concepts are concerned. Because in the second or in the third attempt, what normally happens, it's always like, it's not that the things kind of become difficult. The things become difficult in the second or the third attempt because what happens that when the second time or third time when we are studying something, we are always with the approach that this is something I had read already, this is something I know already, this is something I did last time as well. So what happens by this approach, we kind of somehow start skipping the stuff, which is wrong, obviously, which is wrong. And because of which our preparation for the paper is not up to the mark, which should be always like, be there. So one thing is for sure, if you guys guarantee me one thing, and that guarantee is basically we only have one class a week. If you spare these 3 hours for the class, and if you bear with me these total 3 hours for the class, and then after the class, if for the whole week, every day, you only spare maximum 1 hour. I know the difference between the minimum and the maximum. I'm saying, I'm using the word maximum 1 hour daily for your studies for the reporting paper. I can write it down on a piece of a paper that no examiner in the world can fail you. If you are able to spare 1 hour maximum daily for your studies for this paper, and you are regular as far as taking up the classes is concerned, I can write it down on a piece of a paper that no examiner can fail you. As far as our arrangement is concerned, I will be at least covering up 70% of the exam kit as far as of the reporting is concerned. I will be following the BPP exam kit over here, although I will be sharing the Kaplan exam kit with you as well. The Kaplan exam kit is the one that you will be having at your place, at your home, and you will be doing the questions from it. And if there is any question, any MCQ, any multiple choice, or like, the scenario based question or something that you come across and you kind of find it difficult to solve, you can always share with me. Then we can discuss it into the class as well. The WhatsApp group is going to be created as well sooner, like, maximum by the end of today's class or maximum by the start of the next class. The WhatsApp group is going to be there as well. I am available 24/7 for you guys onto the WhatsApp as well. Because we at the academy, what we basically try to do is to facilitate you guys, because we only exist over here because of you guys. If you guys are satisfied, if you guys are happy, then only we can exist, right? So this is what we try to do. We try to maximum, accommodate you guys. We can try to maximum, facilitate you guys, because at the end of the day, this is you guys who have to perform for us as well. Because at the end of the day, I can, walk around proudly by saying that, look, I had like around 7 to 8 students in my class and they all easily passed the paper, right? So this is what my kind of approach is towards the paper and all. You don't have to hesitate. You don't have to feel like that maybe it's the appropriate time or not. It's okay. I'm always available onto the WhatsApp. All you have to do is to drop me a text onto the WhatsApp regarding the question. If you have a question, you can send me the picture as well that I'm unable to understand. I'm doing the practice. I'm finding it difficult. If there is any concept whatsoever, even after looking at the recorded lecture, you are unable to understand, you can always ask me onto the WhatsApp as well. If I have to type in the reply, if I have to send the reply by a voice message, if I have to make a short video to make you understand, I will go by any means, by any extent, to make you guys understand about that particular concept, right? This is what my approach is always going to be with you guys as well. Currently, for the September attempt and all, my batches are currently running as well, and you can confirm from those students as well that I am always available on for you guys. But again, one thing is for sure, and one thing is understandable as well. Like, if I'm speaking right now and you guys are listening, and if you guys are not saying anything or something, I'm kind of assuming that you guys are understanding each and everything. Because if you guys are on the other side of the screen, if you are unable to grab a concept, if you are unable to understand a concept or something, if you guys don't ask me, how would I know that you have understood the concept, or you have understood the topic or the accounting standard, right? So if there is any issue, or if you think that you have missed something, or if you are unable to understand something, feel free to ask. No need to raise hands, no need to wait for the end of the topic or something. You can straight away unmute yourself, or you can drop me a message into the chat saying that, sir, I couldn't get it, or I'm unable to understand something, and then I'll be happy to give you the examples and all, right? So this is what we have to do in the class. And secondly, it's kind of the monsoon season over here in Pakistan, because of which at times what happens, because of the heavy rainfall and all, at times the wires out there for the broadband and all, they at times do get wet, because of which what happens, my connection, or the connection around of the most of the people, it starts dropping, right? It starts dropping. So what happens, the speed of the broadband suddenly drops. During that case, what might happen, that I might go on to the reconnecting as well. Or if I am speaking, there can be a situation where my voice starts breaking or something. So in that case, you guys have to straight away let me know that you guys are unable to hear me properly, right? So that I may take a pause, I may adjust my connection and all, and then I may resume it accordingly. Okay. So this is something which is onto your end as well, and you guys have to look for that as well. Now, coming towards the other point, let me share a document with you guys first. I want to show you something, and then by that, basically, I want to give you an idea about what I have planned for this, the whole course, basically. Okay. Let me share this document. This is going to be available to the portal, onto the portal as well to you guys. And this is basically our course coverage plan, right? This is our course coverage plan, how we are going to go towards the course. And into this, I have written the tentative topics related to the non-current assets and the other ones, which we are going to cover in our coming classes, which we are going to have a very good and healthy discussion regarding these topics. And then at the end of the fourth lecture, you see we have a test number 1, and then at the end of the next four lectures we have a test 2, similarly test 3 and test 4. Now this document is going to be shared with you, or maybe most probably this might have been shared with you already, and if not, this is going to be shared with you onto the portal. And the notes, the volume 1 and volume 2, they are going to be shared with you as well. Now the reason for showing you this at this particular time is that these tests, test 1, 2, 3 and 4, these are really very important. Okay, these are really very important. These are going to be available to you automatically after the fourth lecture. The tests are going to be there, and these are going to cover up obviously the whole previous topics which we have covered. And if there is a bit of a change during the course, I mean, there can be a situation where over here in lecture 4, rather than covering up the IS2 or IS41, I might be covering up the IS8 or IS37. So this can happen. The shuffling can happen in between the lectures where I am covering a certain topic before, rather than covering up the other topic. This might happen, but at the end of the day, we will be covering up each and every inch of the book and the exam kit. So if I have changed the topic or something, obviously the thing which I have taught you will be in the test, and obviously the thing which I have skipped for the next topic, after the test, that's going to be into the second test. So the thing which I want from you guys is to be regular in the class, and you guys have to attempt the tests as well. You guys have to do the tests as well. They're going to be in the same format as of the ACCA. And there's going to be a countdown timer onto the side of the screen as well, because we are basically developing the portal and the LMS as well, where you will be going for the tests into a proper, what do you say, as the exam environment basically. So the tests you have to do as well. In any case, you cannot drop the tests, because by that I will be getting an idea again as well that how you guys are coping up with the course, right? How you guys are coping up with the course. So this is something which is going to be required from your side as well. Plus secondly, uh, in the reporting paper, I normally give a bit of a homework just for the sake of the understanding and all. It's not a a proper homework where we have to do the stuff or something. But normally for the sake or for the name or at the name or in the name of the homework, basically I give a few of the questions from the exam kit to you guys to solve. So I kind of expect from you guys, whenever I give certain questions to you to solve, try to solve their questions basically, because I know with the job it's kind of very hectic, and it's kind of very hard to cope up with the studies and with the job as well. But you have to try, like my old dialogue which I said earlier, that try to spare maximum 1 hour. If you are done with your revision and all in just 15 minutes or so, it's fine. You can close your books and you are done for the day. If you are able to cover up the whole and everything in just 5 minutes, 10 minutes or 15 minutes, you are good to go. And if by chance you are studying and your 1 hour is over, believe me, close your books. Believe me, close your notes, close your books. You are done for the day. No need to study for more than 1 hour. No need to study for more than 1 hour. Now, this is a very big statement I'm saying right now. But believe me, if you start following this formula, which I'm sharing with you, I'm repeating myself again. I'm ready to write on a piece of a paper that you won't be able to fail, or no examiner can fail you in the paper. Because the 1 hour which I'm saying you to study, during that 1 hour, what do you have to do is you have to turn your cell phone onto the silent, and you have to put it onto the floor face down, so that you are unable to see the light on your screen as well. Even if your phone vibrates or not, or if there's a call or something, you are unable to see your phone as well. Secondly, when you are sitting for for studying or something, you have to make sure that all of the house chores are done. Nobody is going to call your name that give me a glass of water or give me some food or give me this or that. Nobody is disturbing you. That 1 hour when you are sitting, you don't have the earbuds in your ear and you are listening songs and doing the practice. By this you won't be able to do any practice. You will be only enjoying the songs. Believe me, we the humans, we are a single processing system. We can do one thing at a time. I mean, you can try it on your own as well, that, or you can check it on your own as well, that when you are speaking, you can't take a breath in as well. You can't take a breath in as well, because for breathing you have to stop and then you breathe, then you breathe out, and then you start talking again. This is a basic thing which I'm telling you. And when you are studying, obviously, and if you are putting in the earbuds in your in your ear, either you are going to enjoy the song or either you are going to read what's written in front of you. So no earbuds, no TV, no one to disturb you, no cell phone during that 1 hour. Believe me, you in that particular 1 hour, maximum you will be taking around the maximum time, which I've seen by myself as well, and which my students have observed as well. The maximum time you're going to need is like around 30 to 35 minutes maximum. And those 30 to 35 minutes are going to be there when you are done with like around 50 to 60% of the course. When 50 to 60% of the course is done, and afterwards such topics are going to come which going to take a bit of your time as far as the practice is concerned. But in start, you're going to take only maximum around 10 to 15 minutes. So this is the approach which you have to set. This is the approach you have to see, and you have to make sure. And believe me, try to do this in this week. Try to do this in this week, and you will have the results by the end of this week, and by the start of next week, or by the start of our next class you will have the results. You can try this on your own, right? So try to opt for this approach, and believe me, it do works. And honestly speaking, me always give the examples to my students over here as well, that this is an approach which I kind of myself had for myself. And this is an approach which kind of the psychologists around the world, they do kind of back this approach as well, that when you are studying or something, you should have your proper focus on one side. I mean, take it the example from your office as well, when you're doing the work, and if your colleague is talking to you, either you can concentrate on the work or either you can talk to colleague. I mean, if you're driving, either you can focus on the road or either you can enjoy the song. Because if you're driving onto the road and while listening to the radio or the pre, you are unable to properly enjoy the song. Even if you remember all of the lyrics or something, you can check yourself and you can evaluate yourself. What I'm saying, we are a single processing system. We are not our brain is not a multi tasking as far as the utilization is concerned. We can't do multiple things at a time. We can't do multiple things at a time on our own. I'm talking about the voluntary actions. I'm not talking about the involuntary actions, right? You can try it on. I mean, if somebody claims, if somebody or if someone from you claims that you can do multiple tasking at a time, you can unmute yourself and tell me. I'll give you a shortest exercise. I will give you a shortest experiment to do, and you can try it on your own, and you will see the results what I'm talking about. Done. So this is the course outline you guys already have, or you're gonna have. So these are the tests that you guys have to make sure that you are appearing and you are giving the tests. Because if you give the tests, I'll be the one who will have an idea about where you guys are basically standing, and where do I have to put in an extra effort, an extra focus for you guys, for as far as the preparation is concerned. So this is what you are going to help me as far as judging you is concerned, as far as the paper is concerned. Done. Then moving ahead from here, if we talk about let's just share another file with you. let's just discuss the exam format as well. So this is the financial reporting exam format. In section A, we are going to have 15 MCQs, and they're going to be of 2 marks each. Total marks is 30. Then in section B, we are going to have 3 scenario-based questions comprising 5 MCQs in each scenario. So total, we are going to have again 15 MCQs in section B, and they are going to be of 2 marks each. Again, the total is 30. And then in section C, we are going to have 2 comprehensive questions that is going to be of 20 marks each. Total is going to be of 40, and the whole paper is for the 100 marks. Passing, as usual, we all know that is the 50% that we have to follow or we have to get along. So this is what basically your whole paper is about. And in the start, obviously, when we start off with some accounting standards or something, we will be focusing on the section A. Then while progressing through the standard, we will be focusing on the section B type as well. And then by by the end of few classes, few lectures, when we have a chunk of some accounting standards ready with us, we will jump towards the section C as far as the preparation of the financial statements for a company is concerned. We'll go for the statement of comprehensive income and the statement of financial position as well. And we will solve those. Then again, we will jump back to the section A. We will be covering up a few standards. Then we'll be jumping towards the section B and section C. So this is kind of to and fro motion that we will be doing during the course and during the the course coverage and all. And then again, I'm saying and repeating myself again that I will be covering up at least 60 to 70% of the exam kit over here in the class, because this is what my focus is going to be, because this is something which I will always be doing, that after covering up a theory or a theoretical portion of a standard, I'll be putting forward some examples. We will be solving them some examples on our own, and then to apply a specific accounting standard or something, we will be doing the questions from the exam kit, so that we are onto a specific track or something. And as far as the exam kits are concerned, I will be the one who will be providing you, and I'll try to find the latest exam kits as far as the latest edition is concerned, into the PDF format is concerned. I'll be sharing that as well onto the portal as well. Plus, I will be creating a link for the Google Drive. And in that link, when you are going to open the Google Drive, you will be finding the Word, Excel, and PowerPoint slides that I will be using over here in the class. I mean, as I have just opened this page in front of me, when we are going to start the study, we are going to type in and we are going to discuss some of the standards or something. I will be filling up these pages. So by the end of the lecture, if I have 7 to 8 pages written over here, or I have used some Excel files or some PowerPoint files, they will be uploaded into the Google Drive. You will have the link to the Google Drive as well. Once the WhatsApp group is created, I will be sharing that over there as well, so that apart from the notes, when you are going through the video lectures and all, and you want to have that file, you may have that file, or you may access this file as well, so that you have everything which I kind of write or do over here in the class. Done. So this is what my approach is gonna be. And then obviously I will be taking in your valuable feedback as well, and I will be taking in your valuable suggestions as well during the classes as well, and by the end of the classes as well. Like yesterday, I was taking my class for the financial accounting, and one of the student basically gave me a suggestion rather, and asked me that I should slow down my speed of speaking basically. And the student said basically she was kind of having a bit of a problem as far as catching up with my words was concerned. So I'm kind of applying that. I'm kind of trying to slow down my speed of speaking basically, So so this was kind of like, I'm just giving an example that what sort of like, the inputs you can give. I mean, as far as the input related to the class or the notes or anything that you want to input by from your side or something, you guys are more than welcome to do that as well. I'm always open to the suggestions as well. So this is something you can do. And now most of the things are kind of like, done over here. And I have like, discussed whatever I wanted to or I had in my mind. If you guys have something in your mind or something that you want to share, ask, or matlab like, or suggest, you guys can, because meanwhile I'm just opening the notes in the background. And once I am done with the notes, we are going to start. Okay. Now let me just share. Okay. So in my like, coming this lecture as well, and coming a few 1 or 2 lectures, we will be talking about the non-current assets first. And we are going to talk about the recognition and the measuring of the non-current assets. Then we are going to talk about the depreciation of the non-current assets, derecognition, disclosure requirements of IAS 16 as well, along with the IAS 23. Then we are going to discuss the government grant standard and the investment property as well. Now, if we talk about the recognition and measurement of the non-current assets, recognition is basically a tangible non-current asset may only be recognized if its cost can be reliably measured and it is probable that the future economic benefits will flow to the entity from the asset. Initial valuation should be at cost. Cost is basically the purchase cost plus the subsequent expenditure that adds to the asset, plus the cost of replacement parts if old parts are accounted for as a disposal of assets when they are replaced. And repair and maintenance costs are revenue expenses, they must not be included. Now, this is a very comprehensive, very concise statement being written over here. This is a very comprehensive and very concise, you may say, that like, the information which has been written over here. Now I'll just go back to the Word file, and I want to sport about whatever I have like, written over here. This is not the one I had to share. uh, this is the document here. Okay, so basically we are starting from IAS 16, that is property, plant, and equipment. IAS 16 deals with tangible non-current assets. Tangible means physical substance or physical existence. Non-current assets, we already know, who have a benefit of more than 12 months. Now, IAS 16 define property, plant, and equipment as asset held for production to be used for supply of goods, for rental to others, or for administrative purposes, right? So IAS 16 basically, that is the property, plant, and equipment, the standard dealing with the tangible non-current assets. This is the standard dealing with those assets which have a physical substance or existence and whose benefit is for more than 12 months. It defines the non-current assets as the asset held for production to be used for supply of goods, for rental to others, or for administrative purposes. Asset held for production means your plant, your machinery. To be used for supply of goods, we have heard about the forklifters, we have heard about the vans, the trucks, etc. For rental to others, we have heard about, like, if you are into a business of a rent a car, rent a bike, rent a house, you are into a business of some catering management where you are renting out your catering, like, the setups and all. You are into a business of renting, like, renting the generators out, like, for the power and all, right? So if you are into a business of renting out something, and that is something like, having a physical substance or existence, that's going to be accounted for into the IAS 16. For example, rental to others, I'm writing rent a car, bike, generators, setups about something, or for administrative purposes, I can write it over here as like, your infrastructure. Just give me a second. I just need something. Just give me a second. I'm just coming back. Okay, I'm back. Basically, I was kind of like, getting an earth from my laptop because it wasn't charging. So I just had to, like, put down something. Okay, anyhow. So as I was saying, IAS 16 basically defined the property, plant, and equipment as the asset held for production. That is the plant and machinery to be used for supply of goods. That is the forklifter, vans, trucks. The category of the vehicles is basically coming over here. For rental to others, for example, rent a car, house, bike, land, infrastructure, setups, whatever, they are kind of into this. And then for administrative purposes, it means the whole infrastructure of a setup of a building, of a house, it comes into this category, basically the IAS 16. Then we have, after defining its initial measurement. So in it, it is basically initially all non-current assets are measured at cost. Initially, all non-current assets are measured at cost. Now, what is this cost? The definition of the cost is all the expenses being incurred in bringing the item of non-current asset to its present location, condition, and expenses incurred so as to bring it to its intended use. So the definition of the cost is that all the expenses being incurred in bringing the item of non-current asset to its present location, condition, and expenses incurred so as to bring it to its intended use. That whatsoever expense that you incur as far as getting the non-current asset is concerned, bringing it to the site is concerned, and then eventually bringing it to its intended use is concerned, they are all going to add up, or they are all going to be added up into its cost. Let's take an example one. For example, let's just say that this is a summer over there into the Mauritius as well. This is summer over here in Pakistan as well. So this is a basic example for now. I'm just kind of like, making you understand that what does it mean by this whole definition thingy. So we just plan to buy an air conditioner or air conditioning system, right? So let's just say we have the rupees in the Mauritius as well. So I'm kind of go with the local example because this is a local example. So I'm kind of like in a word, I'm using the word the rupees over here. Then I'll be using the currency of the dollars in my example too. For example, we are buying or we are planning to buy an air conditioning system. So in case we buy a 1.5 ton split AC. Say in case its cost is like around 120,000. We buy a 1.5 ton AC. Its cost is 120,000. Now we have just bought the AC, but the AC is still at the showroom or something. We have to get the AC at our place, and then obviously we have to get it installed as well. So we pay for the delivery charges. For example, we end up paying 1,500 for the delivery charges at our doorstep. Now the AC system is still into the box, right? It's into the boxes. It's still packed. We have bought the AC. It's onto the current location as well, and we have bought it as well. But it is not yet into the intended use. We still have to bring it into the intended use by getting it installed onto the wall as well. But as it has not yet been installed, so technically it's not into the the intended use and all. So I pay for the installation charges. For example, they are 2,500, and then by while installing, so as to get our appliances safe from the electrical surges and all, we put a safety circuit breaker switch with the AC as well. Say in case that is for 900. Done. Now, as our electrician turns on the AC, suddenly our light goes out. As the electrician turned on the switch of the AC, the light goes out. After like around 5 or 7 minutes, we kind of realize that this is only our house who doesn't have the electricity in the whole block or in the whole the street. It's only our house which doesn't have the electricity. Every other house has the electricity. The electrician or the installer check the fuses and all and realize that the main switch of the house has tripped. He turns on the switch, the switch again. It turns on the AC again, and then it suddenly trips again. After like 2 3 minutes, we realize that okay, I was disconnected. I was talking about the electricity going and all, and suddenly my electricity at my place basically went out. Okay, so as the electrician was attempting it for like multiple times, after checking it for 2 3 times, then the electrician just said that, sir, if you want to run this AC and all, you will have to install a separate line. You will have to install a separate electric meter for this AC. Now the AC has been installed onto the wall as well. It has been brought into the current location as well, but it is not yet in the intended use. So now you will have to go for the new meter as well, or new electric meter as well. And for that, you have to spend like around 25,000. Now after getting the new meter, after installing it, now you turn on the AC, and now your AC turns on, and now it starts throwing the cool the air. Now, the total of this is going to be the cost of the AC that you are going to report in your accounts. This is what the definition is about. That now, following the accounting standard, now talking about the accounting standard, the cost of an item is not only its list price or is not only its sold cost. From accounting point of view, the cost is going to comprise or going to include all the expenses that you incur as far as bringing the non-current asset to your current location condition, and the expenses what you incur as far as bringing it into its intended use is concerned. All of these are going to be added up into the assets cost. Done. This is what basic the main criteria is. Moving ahead from here, let's just talk about an example two, and that is of importing a machinery. Okay, as far as importing of the machinery is concerned, we have a bit of the discussions over here that we have to do. And same case, we have a list price over here as far as of any machinery that we are kind of importing internationally or whatsoever is concerned. We are going to capitalize, we are going to add up in the cost of the asset or in the cost of the machinery, the list price. And this list price is going to exclude the trade discount and refundable taxes. This is going to exclude the trade discount and the refundable taxes. These are not going to be included as far as the list price is concerned. Now, in financial accounting, you read about the discounts and you read about the trade discount. What's a trade discount? Trade discount is a discount that is available on the spot. We call it as a bargain discount as well. We call it as a bulk discount as well, right? The transaction or the transaction price is triggered after taking into account the trade discount. After the trade discount, we take into account as far as the price is concerned or the amount is concerned. We don't account for the discount which is available to us on the spot. For example, like if you go to a shopping mall or something, and if there is a certain sale being offered by a brand, take a look or try to note that point. On the tag or the tag price, normally the price is written, and then on the whole shelf or the aisle, it's kind of written like 20% off or 30% off, right? When you take an item of your choice that you want to buy and you take it to the checkout counter or you take it to the billing counter, the guy who's doing the bill asks you for the amount that is net of discount. He doesn't ask for a full amount, and by taking the full amount, he returns you some of the money that, here you go, this is your discount. This doesn't happen. He always takes up the net amount from you. So technically, if you buy anything, the transaction is triggered at the net of discount amount. The transaction is triggered at the net of tax amount. The transaction is triggered at the net of tax amount, right? This is what basically happens. So the trade discount is always excluded. Secondly, we have the term being called as the refundable taxes. Technically speaking, when we buy something, we end up paying some taxes as well. Whenever we buy anything, we end up paying taxes on it, be it the sales tax, be it the withholding tax or any other form of a tax which we are paying onto it, the goods or the things which we are buying. Now, if any tax that we buy, if any tax that we pay on the goods or on the the non-current asset which we have acquired, if that tax is refundable, if that tax is refundable, we are not going to take that into account as well, right? The refundable taxes, they are also excluded from the list price as well. And why are they excluded? Because these are the ones which we have paid for now, but they will eventually be refunded by the government or from the government. That will be eventually be refunded, or they will be eventually being given back by the government. Done. So that's why we don't take them into the amount or into the price of the asset that we have bought or we have acquired, right? We don't take that into account. Done. Then obviously we are importing it, we have to pay the import duties as well. We are going to capitalize the import duties as well. Third point is basically related national consignment rule, that whenever you are importing an item in your country and whose value is $50 and above, 50 US dollars and above, right? This is an international consignment rule. Whenever you are importing a certain item into your country from overseas or something, and whose value is around insured, you have insurance. Without that, they won't send you the product, right? Now the question comes at what to do with it. What to do with it? Now the question comes in, what to do with it? What to do with insurance cost? Should we capitalize or should we not? If we have to capitalize, then why? And if not, then why? Anyone, any one of you who wants to shed a light onto it, what should we do with the insurance? Come on, I'm waiting. Anyone? Or I have to call out the name and that person is going to tell me. Okay, Dharma, you tell me what to do with insurance. What's your opinion on the insurance?
If it's paid only one time on importation, I think we should capitalize it if it's a recurrent expense and not.
Okay, if it's okay, Ismail has given me response onto the message as well. That is the one of expense for the non-current asset. We should capitalize it. Okay, and Dharma, you are saying that it should be capitalized as well, right?
Yes.
Okay, we have Gvishna with us. What's your opinion?
I think insurance should be capitalized because when we are importing something, the importer will put an insurance in the product. So when you're importing the machinery, the insurance should be included.
Okay, fine. I've got an idea about what you guys are thinking as a whole. I have taken up the response from the sample of the representing. Okay, Ms. Vishna is saying, I think if occurred once, then should be capitalized. Fine, agreed upon. I've got your point as well. I've got the point, whatever, all of you are kind of the opinion that we should capitalize it. Fine, done. Now, any one of you tell me what is insurance? What's an insurance? I mean, I want to have an idea of that, what you guys know about the insurance. Miss Rakshita. Miss Rakshita, you tell me what's an insurance? I'm not asking should we capitalize it or not. I'm just asking that what is an insurance? Miss Rakshita. Okay, maybe she is unable to hear me. Miss Punasami. Okay, Ismail is saying that is the cost charge for refund if unforeseen disaster happened to the non-current asset. Fine, I agree. Ms. Punasami, can you hear me?
Yes.
What is insurance?
In case of unforeseen event, the machinery will be refunded. I mean, there's an insurance apply for the machinery. In case of unforeseen event, or should it be returned back to the seller? No?
We're gonna get that, right? Okay, I have some response. What very first? I'm sorry, my net got disconnected. So, Miss Punasami, I was asking that what was the first word you said about the insurance?
I don't remember.
No, you said in case, right?
Yes, in case.
In case.
In case of unforeseen.
Agreed upon. Stop here. You said in case of an unforeseen or unfortunate event, we are going to get the refund, right?
Yeah.
But what if there is no any unforeseen event? Then what? We won't be getting the money back, right?
Yes.
Whatever amount we have paid, it will go down the drain, right?
Yes.
Yeah. Now, the point which I wanted to make over here. In case something bad happens, the amount for which we have paid for the insurance is going to help us, and it is going to get our new asset, or it's gonna get our refund back to us, right? But in case nothing happens, which normally doesn't, then it goes down the drain, right? We won't be getting our money back, right? So kinda from the insurance, the claim, I'm putting the high probabilities very high by saying it's kind of 50-50. I mean, if something bad happens, we're going to get the refund. And if something bad doesn't going to happen, we won't get anything, right? This is what the insurance is at the end of the day, right? So it's kind of under the 50-50 thingy. Now, we are talking about what to include in the cost of an asset or a non-current asset, right? We are talking about what to include in the cost of a non-current or a current, or let it be the current and the non-current of the side. We are talking about what to include in the cost of an asset, right? Either to include it into the cost of the asset or not. Now, what is an asset? The economic benefit. What is the definition of an asset? That when it is probable that economic benefit will flow towards the organization, it's called an asset. When it is probable that economic benefit will flow towards the organization and you can control that economic benefit, it is called an asset, right? The word probable means more than 75%. When you are more than 75% confirmed about anything, that is going to be called as an asset. When you are more than 75% confirmed that you are going to get the economic benefit, it's called an asset, right? This is what the definition of the asset is. This is the same definition which we have written since our childhood, or we have read since our childhood, right? So the benefit of the insurance is kind of 50-50. How many times, God forbid, do we hear that the merchant navy ship was drowned, or aeroplane carrying some this the DHL or the TCS one, they kind of crashed, God forbid. I mean, how many times do we hear it on the news? It's really very rare. It's almost to up to zero or something, right? So the benefit from the insurance is not probable. It's kind of very less. It's kind of onto a possible, and it's kind of onto a 50-50 situation, right? So what's the issue over here? The issue is insurance by default doesn't meet the criteria of being called an asset. The insurance doesn't meet the criteria of being called an asset. So that is why when we pay the insurance, it's an expense. When we receive the insurance, it is the income. It's not the asset. Insurance by default doesn't meet the criteria of being called an asset. So that's why we cannot capitalize it into the cost of the asset, despite of the fact that it's a one-off cost, it's a one-time cost that we are paying and all. But at the end of the day, we are including the items into the total amount of something being called as an asset. By default, insurance doesn't meet the criteria of being called as an asset. So that's why we cannot classify it as an asset. Done. So we will not be capitalizing the insurance cost. Then we have once we get the machinery into our country, we get to go for the installation costs. We incur the installation costs. That is we are installing the machinery. Then we have the testing cost. Now, what to do with it? When we talk about the testing cost, that is the cost that we incur normally, and that is a cost that is being incurred by us as far as when we install the machinery, we test it, we check it, either it is working properly or not, either it is going well or not. Because obviously the machinery comes in the parts to us. It's not necessary that the first time when we install the machinery, it starts working the way it is supposed to be. There can be certain adjustments that are required to do into the machinery or something, so that to make it run properly and all, right? So this is what the testing cost is about, that you put in the material, your labor works on the material or something, and you test product or you make a test product to check if the machinery is working fine or not. So it's not necessary that it works very well or it works properly for the very first time. So the standard says that all the costs that you incur in the name of testing. So the standard says all the cost that you incur in the name of testing, like be it the one time, second time, third time, fourth time, whatever the cost you are incurring, no matter how many times you have to test to ensure that now the the machinery is working properly and all, the standard allows you to capitalize it. So we call it as the first testing cost. Standard allows you to capitalize the first testing cost. So standard allows you to capitalize the cost in the name of the testing till the final product is not approved by the production in charge, is not approved by the marketing team that the product is now fit for commercial production. Till that, the cost that you incur in the name of testing will be capitalized. It will be capitalized. Done. It will be capitalized. All the costs that you incur in the name of testing, in the first testing cost, in the name of the testing cost, it will be capitalized. So first testing cost is something you can capitalize because you are bringing the item into its intended use. Now, your production in charge, your marketing in charge approved the item, the product that was being manufactured as a test one. Everyone else happy with the quality, with the quantity that the machinery gave in a certain time period. Now the commercial production has started and suddenly your machine breaks down. Now the commercial production has started but suddenly your machine breaks down. Now you reset the machine, you retune the machine, and then you start doing some of the testing again. Now, this is the second testing cost or third testing cost or fourth testing cost. The standard says all the other testing costs like second, third, fourth, fifth, they cannot be capitalized and they will be straight away flushed to the income statement. You cannot capitalize any other testing cost being incurred after the commercial production has started. You can only capitalize the first testing cost. It cannot be capitalized again and again. Only first time, even if you try it for 10 to 20 times, 100 times you try your product by tuning the machine and all, till the time the production in charge, the quality control in charge, the marketing in charge doesn't approve the product for the commercial production and all, till that time, whatever cost you incur in the name of the testing, you are allowed to capitalize it. But once the commercial production starts, the capitalization of the testing cost stops, it ceases, and now you cannot capitalize it anymore. Done. This is what the first testing cost is. Then, obviously, you have installed the machinery. Now, this is a new technology and you have to train your employees. This is a new technology and you have to train your employees. Now we have a training cost. Now we have a training cost. What to do with it? Should we capitalize it or should we not? I mean, obviously, we have the new machinery installed, but obviously if our workforce doesn't know how to use the machine and all, they doesn't know how to operate the machine and all, obviously we have to train them. So the question comes in, should we capitalize it or should we not? Okay, we have a question from Ismail. All is making sense for me except for the insurance. I mean, it is I'm trying to make is, wait, I have to reconnect to my internet. बेटा दूसरा पेचकस लेके आओ, इससे नहीं खुलेगी।
आपका इंटरनेट रुक गया है? रुक गया?
उधर जाओ। Can you guys hear me?
Yes.
Yes, sir.
But internet is not working at my side, but anyhow, I guess it's working somehow. Okay. I don't know, but at my side, it's showing that the internet is not working or something. Anyhow, let's just start. So Ismail was having the point that all is making sense for me, except for the insurance. I mean, it is paid before bringing the asset to its intended use. So why not capitalize? Ismail, the point is basically we are paying for the cost, obviously, like, bringing it before its intended use and all. But the problem is that the insurance itself is not meeting the criteria of being called an asset, because obviously we are incurring the expense, but the insurance itself is an expense that, or the expense of which the future economic benefit is not probable, right? Okay, Dharma is also saying that, in fact, I also have a doubt.
I have a question.
Yeah, sure, please.
Let's say normally we are importing a car to Mauritius. We pay the cost, the insurance, and the freight.
Okay.
And all the taxes and duties are calculated on the cost, insurance, freight, the maximum which we pay to the importer. Then why when we value the asset, we need to value it with the cost, insurance, freight, and the duties which we pay to the custom. Then why we should exclude the insurance?
Because the thing is that as far as the freight charges are concerned, they will be capitalized. As far as the freight charges are concerned, they will be capitalized. As far as the cost of the car is concerned, that will be capitalized. And as far as any legal duty whatsoever being incurred, that will be capitalized as well. But when it comes towards the insurance, the standard has created a rule that the insurance itself, its future economic benefit is not probable, right? Because we are ultimately incurring a cost. We are ultimately incurring a cost. But as we are incurring the cost, we have to see that either it meets a criteria of being called as an asset or not, right? We have to see that as well, that if we are incurring a cost, either it is meeting the criteria of being called as an asset or not. Insurance itself doesn't meet the criteria of being called as an asset, because this is something you tell me, if I am incurring a cost and I'm not sure I'm going to get a benefit of this or not, because if you are incurring the freight charges, are you going to get the benefit of the freight charges or not? You tell me.
Yes.
How? By paying the freight charges, you are ensuring and you are confirmed that now your product will be delivered to you, right?
Yes.
By paying the legal charges, you are insured in a sense, you are sure now that you are going to get the legal title of the product, right? Right now, you are absolutely sure. You're sure about what cost whatsoever you are incurring, you are going to get the benefit related to the asset, right?
Yes. Yes.
But when it comes to the insurance, you are not sure that either you are going to get the benefit of the insurance or not.
Okay.
Got my point?
Yeah.
Although although you have to incur the cost of the insurance, without incurring the cost of the insurance, you are unable to get the product. You won't be able to hold your product. But again, by incurring a certain cost on an asset, you have to see and check either you are going to get the benefit of the cost or not. By the freight charges, the delivery charges, each and everything. Even if the taxes are non-refundable, they are going to be included in the cost of the asset. The very first point we discussed about. If the taxes are non-refundable, they are going to be included in the cost of the asset. If they are refundable, they are going to be excluded, right? You are crystal clear about each and every cost that you are incurring on the asset, except for the insurance. You are not sure either you are going to get the benefit from the insurance or not.
Yes,
right?
yes, okay. I've got it.
Yeah. So, Ismail, I hope this is clear to you as well, that if you are unsure about an expense that either, or about a cost that you have incurred, like, if you are going to get a benefit from it or not, so how come you are going to classify it as an asset, right? You have to be clear about whatsoever cost you are incurring in order to classify it as an asset, right? So we were talking about the training as well. And now we are into a question that what to do with the training costs that we are incurring as far as our new machinery is concerned. And we were talking about that we have gotten a new technology over here in our, in our company or in our country. And now we have to train our employees. So the question comes, should we capitalize the training cost or not? Because obviously without training, we won't be able to, use our machinery. So now what's your say on it? Okay, Ismail is saying capitalized. Ismail, can you unmute yourself and tell me why? Okay, Mishmina is saying it should be expense cost. Okay, we have two different answers now. One is saying capitalized, one is saying expense cost.
Hello.
Yeah.
I'm thinking we should capitalize it because the training cost will be used to put the non-current asset into its intended use.
Okay.
That's it.
Okay, I got your point. I got your point. And now, Mr. Mina, can you unmute yourself and tell me that what should we do about this? You are saying that we should expense it out. Why? Ms. Mina, your voice is breaking up.
You must train your employee to improve.
Are you guys able to hear me properly? Or is my voice breaking?
We can hear you.
Okay. Ms. Mina, your voice was breaking up. Can you please repeat your point? I wasn't able to hear you properly. Okay, Ms. Mina is saying, okay, you have a connection issue. I got your point. Ms. Shamina is saying that train employees to improve his skill, and this is an expense cost. Anybody else? Anybody else? What's your opinion? What should we do with this?
We should not capitalize it, I think, because it's not directly related to the machinery. What if the employees still doesn't know how to operate the machine when they have completed the training?
Okay, yeah, absolutely right. Absolutely right. Now, Ismail is saying that also the training cost, unlike the insurance, is more on the probable economic benefit side. Ismail, you have to explain your point a bit. Ismail, you have to explain your point a bit because I want to get an idea about what you're thinking.
I mean, the training course will be provided to the related staffs. So it's probable that they will learn it and do it. So
Okay.
it will derive some economic benefits from it. Unlike the insurance is below probable, which is possible, like you said, 50-50%. But the training cost is over 50%. Like
Fine.
we can, okay.
Fine. I got your point. I got your point. I got your point. Okay.
Uh,
I have another question. When we define an asset, how do we define the asset? That it is when it is probable that economic benefits will flow towards the organization, and those economic benefits are kind of controlled, or controlled economic benefits which will flow towards the organization are called as an asset, right? There is an element of control as well. Done. Now, talking about only if I focus myself onto the word training. Training is a knowledge, an experience, right? And training, knowledge, experience, these are all the intangible assets, right? When we talk about the recognition criteria of intangible asset, there is an add-on point. There is an add-on point apart from the normal assets. That is future economic benefit being probable, the cost reliably being measured, controlled economic benefit is over there as well. And then the fourth point, which is solely and explicitly related to the intangibles, and that is being called as the separable. An intangible asset should have a capability of being separable, of being you are able to separate from the rest of the assets, and you can sold it independently. This is an add-on point for the intangible assets. Now, tell me, is training separable from the employees? I mean, training is not a hat or a lab coat or something that if you are wearing today and tomorrow when you leave the company, you leave behind the lab coat or you leave behind the hat, which when I gonna come in your place, I'll be wearing it and I'll be trained and experienced just like you are, right? Training, experience, knowledge. No doubt, these are your assets. Training, knowledge, experience. No doubt, these are your assets. But these are your intangible assets, which cannot be separable from you. These are your intangible assets, which are not separable or which are inseparable from you. The new machinery that you have, the new technology that you have is ready for use. It is you who don't know how to use it. I mean, let's just take an example of a brand new car. Let's just take a brand new example of a brand new car. We both get a brand new car, or we both are standing in front of a brand new car. You know how to drive the car. You sit onto the driving seat, you push the button, you start the car, you put it into gear, and you go, right? Because you possess the skills of driving it. Me, on the other hand, I don't know how to drive. Let's just say I don't know how to drive, right? I'll be just like standing over there and I'll be like, staring at the car, that how to drive and what to do, right? You got my point? The asset is ready for use. The machinery is ready for use. It is me. It is it is the employee who needs the training. And secondly, when we talk about the employees, when we talk about these intangible assets, or in the combination of these intangible assets and all, now tell me, can your company control you? Can your company can control you as far as, like, making sure that you are on time, or you are doing your work? Can your company control you what to do and what not to do? Tell me, Ismail.
Uh, uh, I mean, it can direct you, it can guide you. I don't know about controlling.
It can monitor you, it can guide you, it can evaluate your performance, but it cannot control you. I mean, if you
Yes.
are not feeling well, if you are not, God forbid, if you're not feeling well, if you are not in a mood to work, like, at some particular time or at some day, if, like, if you are not feeling well, then your company can control you. Your company can control you as far as what you do, what not to do, what to do, what not to do. So definitely I'm extremely guys, sorry that, like, my internet today is not working properly, because I guess you must have observed that 2-3 times the electricity was in and out. And basically I'm sitting upstairs in my house, and my router over there, it doesn't have an electricity backup. So technically my connection kind of, like, switches in between. So that's why, please, I'm sorry for this, like, interruption and all. And this is something which I was supposed to do today, but as I've told you earlier, that this is monsoon over here, and it was raining a lot today over here, and it was quite a heavy rain over here, because of which I couldn't go out, and I couldn't get, like, the proper the things which I require to do. So kindly bear this for this only for today only. Hopefully, definitely, for sure, I will try my level best that it won't happen again, and we don't get the interruptions like we are having for now. So, as I was saying, Ismail, and to all, that our employer can monitor our performance, it can evaluate our performance, but as far as when it comes towards, like, uh, controlling, our employer cannot. Our employer cannot control us. It can monitor us, right? So, long story cut short, training cost is the one that we cannot capitalize. Done because of the intangible, or because of the quality of the intangible assets, right? I hope it's clear to you guys. Okay, let's just take a break of maximum 5 to 7 minutes, and then we are going to resume after the break. Okay, our half of the time of the class is over. Let's just take a break of 5 to 7 minutes, and then we will resume. Let's just take a break. Okay, I'm back. Hopefully you guys are back as well. So we were talking about the initial cost where we were looking at the different components, what can be capitalized and what cannot be. So we are done with this example. Moving ahead, let's just talk about subsequent expenditures. Subsequent expenditure on the non-current asset. Now, if we incur any such expense later on our non-current asset, which either increases or which either enhances the performance or it increases the useful we incur such an expense because of which either the performance is enhanced or the useful life of the asset is increased, we are going to capitalize such an expense. For example, we install a new motor system into our non-current asset because of which now the output or the the working of the asset is enhanced. At first it was producing, say in case 100 units an hour, but by upgrading the the motor or something, now we are updating, or we are getting around 150 units or something per hour. That is going to be capitalized. For example, at first our asset had a useful life of around 10 years or so. We incurred a cost on an asset in such a way that its useful life is now increased by 5 7 years, or by even 1 or 2 years or something. If the useful life is increased or something, that is going to be capitalized. Done. Any other expense incurred on the non current asset, any other expense incurred on the non-current asset will be expensed out. Now, this is what we have over here as far as the subsequent expenditure is incurred on a non-current asset. Its performance is going to be enhanced. If its performance is enhanced or if its useful life is increased, it's going to be capitalized. Any other expense incurred on the non-current asset will be expensed out. Now, let's just go back to our PowerPoint slides where we were. Just give me a second to open my PowerPoint slides. Okay. So let's just go to the other slide. Now, this is assembly and testing, possibly also the interest cost. And let's just talk about the other expenses we have discussed so far. And then we are going to talk about the borrowing cost in detail. We have this example Okay, so we were talking about, for example, we have an initial cost example over here. That is the cost before price discount, that is excluding taxes of 80,000. Then we have the price discount of 2,000, sales tax recoverable is 15,000, delivery cost, site preparation and assembly and testing costs at 1,700. So the costs which are going to be capitalized are the purchase cost, excluding the discount. Then this sales tax is recoverable, it will be excluded and it will not be capitalized. Then we have the delivery cost, it will be capitalized. Site preparation cost, it will be capitalized. Then we have the assembly and testing cost, it will be capitalized as well. Then we are going to have a total cost of the asset at 81,400. Moving ahead from here, in the head of the cost, now we have certain other costs that we have to look. That is the site restoration cost. Now, there may be unavoidable site restoration cost or decontamination cost at the end of an asset's life. The initial cost of a non-current asset should include the present value of the expected future site restoration costs. The depreciation of the asset should be based on this total cost. When this present value of the cost is added to the initial cost of the asset, the matching double entry is debiting the cost and crediting the provision for the site restoration. Each year, there is a notional interest charge on the provision included in the total finance charge in the income statement. Now, we have this other cost called as the site restoration cost. This is the cost that can be on us because of some legal requirements or because of the past practice of the business or because of the nature of the business that we have to incur when it comes towards the overall the use of the non-current asset. Maybe because of the use of the asset, the site where we are using the non-current asset, it contaminates the site, because of which now we have to decontaminate the site. We are using the non-current asset for the extraction of the natural resources from the earth, and now we have to level of the earth at the end of the day or at the end of its life or something. So these are the expenses that we have to incur, and these are the ones which are directly associated with the use of the asset. Because of the use of the asset, now this is a liability, or this is some sort of an arrangement or a binding agreement onto us that we have to restore the site somewhere in the future. Now, if this is the context, in this case, what we are going to do is we are going to calculate the present value of the future cost that we will be incurring in the future. Now, this present value concept comes from the financial management. It comes from the paper F9, where we have to calculate the present value. We have to calculate the value in today's monetary terms. We have to calculate the value in today's estimate and all. And then we are going to create a double entry as far as the recording is concerned, and then we are going to debiting the asset. We are going to add this cost into the cost of the asset, because this is a cost that we have to incur because of the direct use of the asset, and a corresponding liability is going to be created. Now let's just go back to our Word file and see the treatment about what we are talking about. Site restoration cost. For example, you buy a non-current asset for 100,000. Present value of site restoration is $20,000. Assets life is 10 years, and discount rate is 10%, same case, because of which we have calculated this present value. Now, how the things are going to work. As far as this present value of the site restoration is concerned, we are going to debit the asset with 20,000, and then we are going to credit site restoration costs at 20,000. What will happen? Asset will be capitalized at 100 plus 20,000, that is 120,000, and a non-current liability will be recorded as site restoration cost at 20,000. At the end of year one, asset will be depreciated over its life, that is 120,000 by 10 years, that is 12,000 per year. We are going to debit depreciation expense with 20,000. We are going to credit the asset with 20,000. If I create extract of statement of comprehensive income, we are going to have a depreciation expense of 20,000. Then we have an extract of statement of financial position. We have an, sorry, this is not 20,000, this is 12,000, my bad. Now, the asset is going to be 120,000 minus 12,000, and that is going to be at 108,000. Now, this is the first half of the, the adjustments we are talking about. This is the first half where we are only taking the depreciation on the non-current asset. Now, as far as this site restoration is concerned, we are going to have unwinding of discount for this. And this is going to be simpler. That is 20,000 into 10%, that is 2,000. And the double entries for these are going to be debit statement of comprehensive income with 2,000 as a finance cost, and we 2,000 over here. And then in non-current liability, we have this site restoration cost, and this is going to be 20,000 plus 2,000, and this will be a total of 22,000 over here. And we will keep on unwinding the discount till the asset is used over its life. And then after like 5-10 years, till when the asset is used, and then at the end of the life of the asset, we are going to debit the liability, and then we are going to credit the cash when the actual payments are made for the site restoration, or when the actual expenses incurred as far as for the site restoration is concerned. This is what we are going to do as far as our liabilities are concerned, or as far as taking into account the working for the liabilities is concerned. Done? I hope it's clear to you guys. If you guys have any question or something related to this site restoration or something, you guys can feel free to ask. Kindly let me know if it's clear to you so that I can move ahead. Guys, you there? Can you guys hear me? Okay, I've got the reply. Okay, it's clear. Okay, so this is what basically the concept of the site restoration is. Now, this is the practical example I've shown you as far as the workings are concerned for the site restoration or for the site dismantling or the future dismantling costs are concerned. This is how basically we do the workings for this. Now, moving ahead, let's just go back to our PowerPoint and let's just see what other points do we have for this. And now each year there's a notional interest charge on the provision, including in total finance charge in the income statement, the same extract of the 2,000 that I have taken into account. Let's just see this example over here as well. That the asset is purchased, which costs 800,000. Expected life is 2 years, no residual value. Expected site restoration cost at the end of year 2 is 242,000. Cost of capital is 10%. So the present value of the site restoration is 200,000. We just discounted this value to the present value, which is at 200,000. Now, the initial cost of the asset is 800 plus 200 is at 1 million. Annual depreciation charge for 2 years is 500,000 per year. And the provision for the site restoration cost, initial provision is at 200,000 because this is the present value of the site restoration. Done. Then we have the year one interest charge of 20,000. We have the closing provision as 220. Then we have the interest charge at 10% on this 220 amount. This is 22. We get a closing provision of 242 in total. This is the finance cost in the year two. Over year two is going to be 42,000. So in year two, we are going to credit the bank or the cash that is paid, and we are going to debit the provision when the provision is eliminated or when basically we restore the site. So this is what basically we have to do, or we have to take this into account. Now, moving ahead, I'll be going and I'll be jumping towards the borrowing cost. Now we have this standard over here, and this is IAS 23, that is the borrowing cost. And we are going to discuss the standard over here right now, because this is the standard which has to deal with as far as the cost of the non-current asset is concerned. And this is the IAS 23. Borrowing costs allows the interest cost to be capitalized as a part of the cost of a non-current asset, where the interest costs are directly attributable to the acquisition or construction of an asset, and the asset takes a substantial time to get ready for its intended use. Now, this borrowing cost, let's just talk about this borrowing cost. Standard says, like as per the definition, that all the costs that are incurred in bringing the non-current asset to its present location, condition, and expenses incurred so as to bring it to its intended use. This is the definition of the cost, and it takes it into account. And basically, the costs of borrowing are the ones, basically, when you borrow the money for the acquisition or for the construction of a non-current asset. Obviously, in that case, we are incurring a cost, and that is the cost of the interest on the borrowings. The standard says, and the standard allows you to capitalize the borrowing cost, that is the interest cost that you are incurring as far as the construction or the acquisition of the asset is concerned. The points which are to be noted over here, there are certain few points. We are going to discuss about this standard in detail in the later half. But for now, the points that you have to keep in your mind are that the borrowing cost is basically the cost of borrowing. If you are getting a loan, so the cost of that loan is basically the interest that you are incurring or you are paying on that loan. Now, how the things work is same case, right? Now, standard says you are allowed to capitalize the interest on that loan once the construction of the asset starts or the acquisition, active acquisition of the asset starts. For example, if you have to buy the asset, a ready-made asset you have to buy, you have started off the buying process, like buying, paying the advance, or buying, going into the paperwork or something. You have started that work. If you are constructing the asset, the active construction work has started, and the capitalizing of the borrowing cost will cease. It will stop once the asset is available for use. Once the asset is available for use, you will cease to capitalize the borrowing cost. I mean, it's up to you till when you start using the asset. For example, you still not start using the asset for like coming 2, 3, 4 months, but The capitalizing of the borrowing cost will stop once the asset is available for use. So these are the points you have to keep in mind while calculating the borrowing cost. One, you will start capitalizing once the construction or the active construction starts, and you will cease once the asset is available for use, right? These are the 2 points that you have to keep in mind, that when to start the capitalizing and when to stop the capitalizing, right? These are the 2 points that you have to keep in your mind. Done. In order to get an idea about when the asset is available for use or how the asset is available for use. Okay, these are the 2 points which are related to your capitalizing of the borrowing cost. Done. Now let's just go back and let's just talk about after this subsequent expenditure. We have now subsequent subsequent can measured by following models. One is the cost model, one is the fair value model. Now, the cost model. The asset is reported at its carrying value. Carrying value is cost minus accumulated depreciation. Now, this word depreciation, as far as the literal meanings are concerned, wear and tear or decrease in value due to use on. This is very interesting as far as the depreciation is concerned. You can call it depreciation or the depreciation usage only. The value which the asset loses because of its usage, it is going to be called as the depreciation. Now, the asset can lose its value because of other reasons as well. Apart from its usage, it can still lose its value. For example, if there is an accident because of which the asset is kind of damaged and suddenly the asset loses its market value, there is a certain recession, a change in law because of which the asset loses its value. Say in case the products which are manufactured from the asset, there is a ban on the products or something, the asset is brand new, but now the asset cannot be used, so technically it loses its value. These are all the situations where the asset can lose its value. The terminology used for that context is called as an impairment. The term used for those instances is called as impairment. On the other hand, if the asset loses its value because of its usage only, that is called depreciation. Done. And the definition that we have for the depreciation is, it is the systematic allocation of the cost of an asset to income statement according to its usage on a pro rata basis. The depreciation is, it is the systematic allocation of the cost of an asset to income statement according to its usage on a pro rata basis. that it is that systematic way by which you charge the cost of an asset to income statement, to the income statement on a pro rata basis. That is the time apportionment according to its usage. Then we have methods of calculating depreciation. One is called as straight line method. One is called as reducing balance method. One is called as the straight line method and one is called as the reducing balance method. When we talk about the straight line method, the formula is cost minus scrap value divided by useful life. We are going to get a fixed depreciation charge per year for every year. We are going to get a fixed depreciation charge per year for every year. Now, we have a new term over here being called as the scrap value. And we have a new term for the useful life. Now, as far as the scrap value is concerned, scrap value or residual value is the value at which the management expects to sell the asset at the end of its useful life. Done. Whereas useful life is the estimated time period over which the asset will be used. Done. Scrap value, residual value is the value at which the management expects to sell the asset at the end of its useful life, whereas the useful life is basically the time period or the expected time period or estimated time period or which will be. So this is we have or we have seen here. But on the scrap value on its useful life. So this is what the straight line method is. And then we have balance method, and the formula for the depreciation is equal to carrying value. This is the carrying value. You multiply the percentage of depreciation with this and you get this amount. And this is a depreciation charge for a specific year. You get a depreciation charge for a specific year over here with this. Done? Okay, do I have to show you guys the working of the straight line and the reducing balance, or you want me to show you one of the examples of how the depreciation works and how the reducing works, or you are familiar with that? Tell me, it's totally your choice. If you want me to, I can show you an example over here that how the straight line method works and how the reducing balance works. Okay. One has told me, no, it's okay. Other ones, no one is telling me. It means you guys are saying that it's okay to move ahead. Fine. So we have these two methods with us. Now I have to share my Excel with you because I want to show you the accounts which we prepare normally into our cost model. I have to show that as well to you. So I'm just opening my Excel for now. And once it's opens, then I am going to share my screen for that as well. Okay, it's open now. Here's the Excel, and I want to show you some accounts over here, which you will be preparing as far as the final accounts are concerned, or as far as, if not in the final accounts, then it's confirmed as far as the cash flow statement is concerned. You will have to make these accounts so as to identify the figures. So this is the cost account. We are going to have balance brought down here. Then we are going to have acquisition during the year over here. Then we are going to have disposal over here, and then we are going to have balance carried down over here. This is the standard account for, or standard T account rather, for the cost account. Then we have accumulated depreciation account. We have the opening balance here. We have the closing balance here. We have the depreciation charge for the year here, and then we have the disposal here. Now, again, as far as the acquisition is concerned, I want to show you guys that how the things are working over here. We are going to debit the asset account, and we are going to credit the cash, or like, the creditor, or whatever, like, the payables, or whatever do we have over here. Let me just increase its font a bit. Why the font is not increasing? Okay. And as far as the disposal is concerned, we are going to debit the disposal account, and we are going to credit assets cost account here. Then we have the depreciation charge with us. The double entry is depreciation expense debit, accumulated depreciation credit. And as far as this disposal is concerned, we have the double entries for this, and this is debit, accumulated depreciation account, and credit, the disposal account. And then this third one is basically the disposal account. We have assets cost here. We have accumulated depreciation here. We have cash proceeds here from the asset. And then we can have a balancing figure here, or a balancing figure here. And this balancing figure is of the income statement basically with us. And this is normally the loss on disposal, and this is normally profit on disposal. And the supporting double entries I will show you over here in a second. Okay, as far as this is concerned, we are going to debit the income statement and we are going to credit the disposal account. And for this, we are debiting the disposal account and we are going to credit the income statement as a profit on disposal. So these are the three accounts which normally we make as far as into the cost model is concerned. Done. These are the three accounts that we normally make as far as the cost model is concerned. Done. I hope it's clear to you. I mean, these are the basics. You must have studied these as far as in your financial accounting was concerned. So this was a refresher in order to get an idea that how the accounts basically worked over there, because this is something I'm 100% sure that you are going to use these accounts as far as the cash flow statements is concerned, but there is a possibility that while the preparation of the financial statements, we might have to make up these accounts, but not, if not these accounts, then at least the double entries which we have written over here, they will be used for, like, you know, the posting and the adjustments as far as the depreciation or the disposal, or for the sake of calculating the profit or loss and disposal is concerned. Moving ahead from here, let's just go back to our Word file. Now, this is an interesting thing happening. At times we are switching to the Excel, at times to the PowerPoint, at times to the Word. And this is because we are kind of like, you know, this is like a story rather than like, you know, only sticking to only one single file. We have to see and extract, and we have to get an idea about what we are studying with the examples and all. Done. Okay, moving ahead from here, the second model that we have, these let's just talk about the fair value model. In the fair value model, the asset is quoted its value. Fair value. We have okay, so as I was saying, this fair value model, the value at which an asset could be exchanged or a liability settled between knowledgeable, willing parties in an arm's length transaction. So a fair value is basically The value at which an asset could be exchanged or a liability settled between the knowledgeable willing parties in an arm's length transaction is called as a fair value. This is called as the fair value, which we are going to now talk about, that how basically it works, or how the fair value basically works, right? Okay. Let's take an example. Assets cost is 100,000. Life is 10 years. Suppose after 3 years, the asset is appraised as having a fair value of 90,000. Show how this will be shown in the accounts. Now, as far as the work is concerned, as far as this whole, the scenario is concerned, the basic thing which you have to keep into mind is, when you want to, or when you have to account for the fair values into accounts, when you have to reflect the values which are over there into the market, and you want to reflect them into the accounts, you have to remember a certain rule. And that rule is, in order to check for the gain or loss in the value of asset, remember to calculate the carrying value of the asset at the exact same date on which the fair value is given. This is the very first and most crucial point, and you have to keep it in your mind at always, that in order to check either your asset has gained in the value or has lost its value, you have to make sure that you calculate the carrying value of the asset on the exact same date on which the fair value is given. This is the very first important point. Now, if we keep this point over here in our mind, we can see the fair value is at 90,000 at the end of year 3. So for this, in order to compare these, what you have to do is, step 1, calculate the carrying value of the asset at the end of year 3. And how we are going to do that? Cost divided by useful life. That is 100,000 by 10 is equal to 10,000 depreciation charge into 3 years is 30,000 accumulated depreciation. Value equal to 100,000 minus 30,000 is, or 7,000. That you got Okay, I'm sorry I was disconnected again. So I was just saying, now you have to compare the fair value with the carrying value. Fair value is 90,000, whereas carrying value is 70,000. Now, when the fair value is greater than the carrying value, the value that you have in the books, if the fair value is greater than the carrying value, that is, you estimated that at the end of 3 years, the asset had a carrying value of 70,000, whereas in the market, instead of the 70,000, assets actual value was kind of standing, or its fair value was standing at 90,000. So when the fair value is greater than the carrying value, we have a revaluation gain. And in this case, the gain is of 20,000. We have to compare the fair value with the carrying value. When we compared the fair value with the carrying value, we came to know that in the market, the value of the asset was higher than its carrying value, and we had a gain of 20,000. Now, how to record the gain? Now, how to record this gain? I mean, how to reflect this gain into the accounts? When we talk about this gain, there is one more thing we have to show and we have to think. This gain cannot be taken into the statement of comprehensive income like any other gain that we have or that we earn. Why? Because this gain is basically not realized. Not realized means we have not yet earned this gain. So that is why we cannot take it into the statement of comprehensive income. Why we have not earned? Because we are still using the asset. In order to earn this gain, the situation can be simple, and that is to dispose of the asset and then to realize the gain. Then we have to earn this gain. Now, we have not earned this gain, but value has increased in the market and we want to reflect it into the account. So now what to do? The best thing is to take it to the increase our equity with this gain. How? We are going to debit the asset with 20,000 and we are going to credit the revaluation gain, our equity, with 20,000. Now, if we prepare the extract of statement of financial position, the asset is now reported at 90,000. In equity, we have revaluation reserve with 20,000. Done. So this is how basically we record our gain on the revaluation reserve by increasing our asset and increasing the revaluation reserve. Next year, the depreciation charge on the asset will be revalued amount divided by remaining useful life. Revalued amount in this case is 90,000 divided by remaining useful life in this case is 7. years. Now, so we get a depreciation charge of depreciation charge is going to be 12,857. Now, before calculating this revised you that revaluation gain cannot be recorded into the statement of comprehensive income. One way to realize this gain is to discard and we can realize this gain. There is another way of realizing this gain. And that way of realizing the gain is by using the asset over its life. Done? Now, the standard allows us to realize this revaluation gain over the life of the asset. And how do we do that? We do an annual transfer from revaluation gain to retained earnings. We do an annual transfer from revaluation gain to the retained earnings. There's an annual transfer, like we can do on an yearly basis over the life of the asset by which we can transfer or we can realize the gain, and how and at what amount that gain or that annual transfer is going to be at. That is going to be revaluation gain divided by remaining useful life of the asset. That is, the revaluation gain is 20,000 by remaining useful life is 7,000. We get around $2,857 per year. The double entry for this is going to be debit revaluation reserve with 2,857 credit by 257. Retained earnings with 2,852 is done in order to realize the gain. Done. I hope it's clear to you guys. Now, if there is anything that you guys want to ask or something, you guys can. Otherwise, we are good to go. Now, let me just open my exam kit. I want to share a bit of the reflection of the exam kit as well with you guys. Just give me a second. Okay, In section A, we have tangible non-current asset, and we have this question 24 over here, and that is, Foster Company has built a new factory incurring the following cost: land, material, labor, architect fees, surveyor fees, site overheads, a portion of administrative overheads. Then we have the testing of the fire alarms and business rates for the first year. And the question is asking, what will be the total amount capitalized in respect of the factory? Now, we have talked about what we have studied as far as the capitalization or capitalizing the cost related to the non-current asset is concerned. Let's just copy this question from here. And let me just open my Excel. I'll go to the sheet 2. Okay. Here we go. Let me just copy the question here. Okay. Now it's asking that what is the amount that has to be capitalized as far as this factory is concerned. Now, obviously, the land, it will be capitalized with 1200. Then we have the materials used for construction, that is 2400. Then we have the labor cost as well, and the labor is at 3000. Then we have the five. Then we have okay. I was talking about the site overheads. Then we have the portioned administrative overheads is concerned. That is the overhead cost which we have incurred, and now we are kind of apportioning them over here, right? As far as the apportionment of the overheads or the administrative overheads is concerned, that is not the cost that is associated with as far as the construction of the factory is concerned. So we are not supposed to capitalize it into the cost of the factory. Then we have the testing of fire alarms. Testing of fire alarms is at 10,000, and this is into thousands. And then we have the business rates for the year or the first year. Again, the business rates, these are the costs which do not have anything to do with as far as the cost of the construction is concerned or cost of this factory is concerned. So now we are going to have the total of these costs, and this is at 6950, and 6950 is option B that we have over here for the cost of the factory that we have over here. Done. I hope it's clear to you guys. Moving back to our exam kit. Now we have this question 25 with us. Let's see this question. That is, Carriageways Company had the following bank loans outstanding during the whole of the 20X8, which formed the company's general borrowings for the year. We have a 9% loan repayable at 15 million, Then we have 11% loan repayable 20Y2 of 24 million. Carriageways Company began construction of a qualifying asset. Qualifying asset means an asset which is being or which is qualified for as far as capitalizing the borrowing costs are concerned. Done. So it began the construction of a qualifying asset on 1st April 2008 and withdrew funds of 6 million on that date to fund the construction. On 1st August 2008, an additional 2 million was withdrawn for the same purpose. Calculate the borrowing cost which can be capitalized in respect of this project for the year ended 31st December 2008. Let's just copy this question as well and then move to our Excel, and let's see that how the workings are going to work. Now we have multiple borrowings over here. We have multiple borrowings for the construction of this asset. So one is at 9%, one is at 11%, and we have to choose one discount rate or one interest rate that we have to take into account as far as the calculation of the interest cost is concerned. Done. Now, how to do the calculations, by the way? When we have this sort of a situation where we have multiple interest rates, what we are going to do is we are going to calculate the weighted average for the interest. Let's just calculate, first of all, the weighted average interest rate. And if we see, we have 9% loan, the amount is 15 million, and for the 11% loan, the amount is 24 million. So we have a total borrowing of 39 million. Now, what do we have to do is we have to calculate the weighted average. And the weighted average is going to be calculated as weight of 1 into cost of 1. Let's just denote the cost with K, plus weight of 2 into cost of 2. This is how we are going to calculate the weighted average. Then that is going to be at 15 by 39, and then we have 24 by 39. And we are going to calculate this into percentages. We have 0.38 or 38% for the 9%, and then we have 62% for the 11% as the weights. Now, the formula 0.38 into 9% plus we have 0.62 into 11%. This is going to be the weights, and this is going to be the weighted average that is going to be calculated. And now if you look over here, we have if I solve it over here, this is 0.38 into 0.09 plus 0.62 into 0.11. And if we go over here, we get this at 10.24%. We get this at 10.24% as the weighted average, or we can take it as the the percentage that is we are going to use for the weighted average of this loan, basically. Done. This is the weighted average which we have calculated. Now let's just see when and at what time we took out the loan, so that we can calculate the total time frame on which we have to calculate the interest. Number one, the year end is 31st December we took the first loan on 1st April, the 6 million. Interest on 6 million loan taken on first year-end is 0.24% into April, May, June, July, August, September, October, November, December. We have 9 months into 9 by 12. So we get into 0.1024 into 9 by 12. We get 460,800. And then interest on 2 million was the other amount. Yeah, and it was taken on 1st August. On 2 million loan taken on 1st August. This is going to be 2 million into 10.24% into August, September, October, November, December. August, so it's going to be 5 by 12. So this is into 0.1 into 5 by 12, we get 3. Now we are going to have total 133. We have the answer 46, 13, and the extension. We don't have any such option over here. I'm sorry, I was disconnected again. I'm the time to saying that our answer is at 546,133, whereas there is no such option for this amount. This is because we have taken up the percentage at 10.24%. If you have the exam kit, or if you try to look into the exam kit, the percentage with the exam, which the solution in the exam kit is taken, is at 10.3%. This is 10.24. We cannot round it off at 10.3, because if it would have been at 10.25 or 10.26, then we could have rounded off at 10.3. In the solution of the exam kit, if you have that, if you open the exam kit solution, you can see that the percentage which it is taking over there is at 10.3%. If I solve it with the 10.3%, if I solve it with 10.3%, now look, answers 549,333 option A, which is also the answer in the exam kit as well, but this is wrong. We cannot take this at 10.3 because the weighted averages which we have calculated over here gives us the answer of 10.24%. And even if you calculate those over there, you are not going to find that at the the 10.24 thingy. Okay, you are still not going to find them at the 10.3. Even then, the answer is going to be at 10.24. This is a technical error in the exam kits. There are multiple questions which over the course I will show you within the exam credit with the basis or on the basis of the that certain a bit of the some glitches you may there into the exam credit which you can or you will come across during the course of the study. And there are certain MCQs where you will be finding that the calculations that we have done are absolutely right, and there are certain MCQs where as I was saying, that there are certain glitches in the exam kit, or there are some questions in the exam kit whose solution has not been updated, or not every question is wrong. Obviously, there are only like around 3 or 4 questions we're going to come across that like the solution you will find over there is properly, most probably is correct over there, like the one we have solved over here, right? So this is all from my side for today, and we still have this non-current standard under the consideration, and we will be continuing it into our next class as well. Now I would like to know that what's your feedback regarding the today's session. If you think that we need to improve anything or we need to change anything or something, you guys are more than welcome to put on your points, and I'll be more than happy to consider them and then put them into our class as well. Anyone? Dharma, what do you say? What's your opinion about today's class? Dharma, you there? Can you hear me? Okay, wait, I guess Dharma is not there. Ismail, what's your opinion on today's class?
I like it, but my internet connection was a little unstable. That's it. Otherwise, it was all okay.
Okay. And okay. Noha is saying, Prabhakar Noha. Okay. Yeah, the only issue is the internet connection problem. Yeah, right. You're absolutely right. There were certain moments. Yeah, I agree. But no, it can be helped. It can be helped. Basically, today I had a bit of an internet issue over here. I totally agree, because this is something I already mentioned you at the start of the class, that this is something we might come across, and this actually happened basically in the later half of the class. At the first half we were going perfectly well and fine, but in the later half we had this problem. I totally agree. and this is something into my consideration, and I can assure this one thing, and I'm sure about this thing, that it won't be happening in the next class, because I'll be taking care of the router, inshallah, that tomorrow I will make sure that everything is kind of into its perfect place and the things are working again.
It was my internet connection was unstable. I mean, yours too, but mine too.
Yeah, you too, but obviously the other students over here, they are giving me the feedback that somehow, some way, a bit of an internet issue was there. Apart from that, they all are kind of happy. Ms. Shamina, you are here. What's your opinion on the class? Ms. Shamina. Okay, and Miss Rakshita, what's your opinion?
For me, I like the class. Everything was clearly explained in details. So it was nice.
Okay, thank you. Thank you for
Thank
your,
you.
thank you. Okay. Overall, I guess I can sum up with the the responses in the chat and via the mics. I've got an idea that overall you guys are happy with the class, but the only issue is technically is, and this is something I accept as well, that was of the internet, and this is something definitely for sure I am going to look into it so that it doesn't happen again and we don't have these sort of interruptions again in the class. So this is all from my side. You will be provided with the WhatsApp group as well, with the portal link as well, where you can access the lecture and the videos as well. And soon you will be provided with the Google Drive link as well, where the PowerPoint notes and the Word file, the Excel file, everything is gonna be uploaded over there as well, so that, and you can easily access like you know the resources which I have used. Okay, Ms. Shamina is saying sorry, got internet issue as well. Ismail is saying not too fast, not too slow. And Ismail is also saying the class was at the right pace for me. And Shamina is also saying that very interactive as well. Thank you so much for the feedbacks. It means you guys are happy, the way we are progressing and we have started off with the class. So this is the thing which I wanted to know, that are you guys are kind of happy or not. And yeah, internet issue has been a problem. It will be worked out and it will be solved. So as I was saying, Google Drive link is going to be provided to you so that you guys can access the Word, Excel, and the PowerPoint slides. Apart from that, the WhatsApp group is going to be created as well. You will be having an access to the portal as well, where the recorded lecture along with the notes for the volume 1 and volume 2 are going to be there as well, so that you might access them and you can start going through them as well. Done. So take very good care of yourself, enjoy the week ahead of you, the weekend as well, and try to revise what we have learned today, what we have discussed today, so that when next time we meet, we are not totally blank. We do have a bit of an idea about what we have studied, and so that next time when we meet, we kind of go on with this IAS 16, along with we will be dealing with some other standards as well. And in the next class, we will be trying to close our discussion on this whole non-current asset thingy. And in the next class today, obviously, I had to build up a base. I had to build up a foundation. So that's why we were very much into the theory. But at the end, we have done the 2 questions. I just wanted to give an idea that how the working onto the exam kit will work and will go on in our class. So take very good care of yourself, your family, your friends, and the people around you. So till we meet again, it's bye bye from my side. Take care. Bye.
Bye.
No.